Billy, let's do some real talking right now.
All right. Looking forward to it.
Episode 1. It won't get worse than this one. Bay Area Real Estate Podcast. For those of you who do not know who Billy is the director of sales here at Selling Silicon Valley. So Billy, really excited to chat with you, man, and get your take on what's going on right now in the real estate market, not just in Silicon Valley, but all around the Bay Area. What are you seeing out there right now?
Oh man, we're in interesting times for sure. It's been a lot of ups and downs, and I think, honestly, that this is probably going to remain to be the case. I think that we really can just take a lot of what we used to take for granted and just kind of toss it out the window. We're at this point kind of living minute by minute. I mean, I don't think that either of us would have ever suspected just the overall effects that we've seen because of all the decision making the Fed has been doing. And, unfortunately, we're just kind of at their whim. So we're seeing a lot of unexpected stuff. I mean, I don't know about you. I didn't expect Fremont to overtake San Francisco. I knew something would, but that was not on my radar. So a lot of what's conventional is no longer really the case.
What do you mean by Fremont overtaking San Francisco?
As far as the most expensive place to own property in the Bay Area, it is now number 1.
Interesting. Okay. When did that come out? I missed that headline.
This is only like a week ago.
Okay.
And okay. I mean, it's not like the most surprising, but I didn't think it was going to happen that fast.
Interesting. Yeah. So, in terms of the Fed and the decision making, as you alluded to that, you're obviously seeing it from both sides. You're seeing how it's impacting buyers and how it's impacting sellers. With the clients that you're working with right now and the clients that you've, successfully helped buy and sell in like the last 6 months or so, what are the conversations like? And what is the impact on the market right now at the ground level? Because your boots on the ground right now. So what are you seeing?
Well, honestly, a lot of the conversations that we're having right now is really geared towards just making sure that we're staying as active as possible and that we are continuing to move as soon as opportunity presents itself. Because it's amazing how quick things can change. Just to kind of give you an example, I have a client right now who I'm helping look in San Jose, and over the course of 2 weeks, we saw their budget go up and down by about $100,000 just based on the going rate of the day and just how the market reacts based on the comments that we're getting from the Federal Reserve. And so a lot of it is just continuing to really push to ensure that while we never rush into any decisions, that we are moving quickly, because you literally don't know what's going to happen, in 7 days.
So, but by that you mean like one of the clients that you're working with, like their max has been fluctuating within like $100,000 delta, give or take.
Yeah.
Interesting.
On like a week by week basis.
Right. And what's the purchase price ish? Like 1.2, 1.3?
Between 1.1 and 1.2.
Okay.
Depending on the day.
Yeah, depending on the day. Interesting. So like what's the strategy there then? Like if you're helping them buy and there's that much volatility in their purchase price, like what kind of advice are you giving a buyer like that?
Yeah, I mean, I think that the best advice in those kinds of situations is to really have multiple strategies. So if we're playing it safe and we want to look at the stuff that's fresh on the market, okay, awesome. Let's leave plenty of wiggle room in the budget. Let's ensure that no matter what happens, we're always going to be able to step up if necessary. And if we're looking for something that's going to be maybe a little bit larger, okay, then let's kind of take the opposite approach and let's have the majority of our focus be on stuff that it's been on the market for a while. We know that we're going to have a little more leverage, and really just making sure that we stick to these rules as best as we can.
Gotcha. Okay. Yeah. So what I'm hearing you say then is you're tailoring it based on like their risk tolerance, right? So let me just give you an example here, right? So what if you're looking at a property that you're going to write the offer and you know that you could get it at 1.2, but the rates go up and so now their budget's only 1.15. What do you do?
That's never a fun conversation to have, but it is definitely something that we run into, unfortunately, right now, sometimes more often than we'd like. And, in those situations, the most important thing to keep in mind is that we need to be realistic and we need to know, okay, if we're actually going to look at this, then we need to truly investigate all the avenues. So let's look at, different loan packages that are out there, different things that we can do to enable them to continue to have that buying power. I mean, really, it's just about getting creative. I've had a number of people come to me recently asking, for instance, about like assumable loans. And these kinds of things should never be the primary focus, but it's also something that we should absolutely look into whenever possible.
Yeah.
So for instance, that kind of situation, well, more than likely we should switch our focus elsewhere, but it doesn't hurt to, for instance, look into tax records. Let's see the existing mortgage. Is it something that could potentially be assumed? And if it is, all right, then what do we have to do in order to make that happen for them? I mean, is it something that we're going to run into very often? Probably not. But ultimately, in order to really be showing our clients that we're doing the most for them, we need to consider any and all avenues, no matter how outside of the norm it might be. But at the end of the day, I want to make sure that they understand that if they really want to ride the line that closely, that if we're going to, we need to make sure that we're going to exhaust any and all avenues as far as making it a reality for them. Not just, okay, we're going to just send something in, cross our fingers, and hope for the best.
Right. So here's a stat for you, one that I just pulled. Alameda County, Contra Costa County, from March through June, pendings were outpacing supply. The last 2 months, we have seen supply outpace pendings, right? So the script has been flipped. What does that tell you about the market in Contra Costa and Alameda, given that we had a few months where things were really, really like looking like they were trending in the seller's favor? Now we've got 2 months where things are a little bit more in the seller's favor. Now things are looking like it's a little bit easier for buyers. Now, is it easy for buyers? No, but the market conditions have shifted a little bit. Are you seeing that in real time? Is that reflected in like the offer scenarios that you're finding yourself in? Kind of give me the lowdown on what you're seeing in the East Bay.
As far as East Bay goes, I think a lot of it really depends on not only where, but also the property type. We're definitely seeing a little bit of an easier time, longer days on market, that sort of thing in like the condo and the townhome sector. But it's because, when you think of the East Bay, there's a glut of those. I mean, even now with inventory being lower than where we'd like, there's still quite a few options out there. Now, when it comes to the single family sector, I mean, you got to be on your toes. Absolutely. And so I think what we're seeing in those trends is kind of a combination of the two. So we're seeing, the slower activity when it comes to the not single family sector kind of starting to just drag down the averages. But overall, I mean, if you've got a single family home in the right neighborhood, all it needs is 4 walls and a roof and it'll sell. Yeah.
That's a really good point. So for those of you listening at home right now and you're trying to like decipher what Billy just said, what he's saying is this, is that baked into these numbers are not just single family homes, but also condos and townhomes. And you're right. Like if you were to segment out those sectors, condo, townhome versus single family, I don't have that data in front of me, but I don't need to see the data to know what it's going to tell us. Right. And so what Billy's saying is absolutely true, is that if you're focused on buying a single family home right now in the East Bay, these numbers, or this data doesn't really get the full picture. It doesn't paint the full story, which is absolutely true. And so if you are, however, buying a condo and a townhome, chances are things have gotten a little bit easier for you in the last couple of months.
Yeah, absolutely.
More or less. Yep. Cool. And now let's go over to Santa Clara County, Billy. So in Santa Clara County, we thought there was a chance that we could see supply outpace pendings for the first time in since February. So since February, we have had pendings consistently outpacing supply. Yeah. 930 homes pending, 866 homes active on the market. Is that representative, Billy, of what you're seeing right now, where it's still very difficult for home buyers in Santa Clara County?
Yeah, I mean, if you have anyone looking, for instance, in San Jose, in like the million-ish dollar range for a single family specifically,
yeah,
we haven't seen anything new hop on the market for going on like 3 or 4 days now. Literally zero. It's
Wow.
definitely pretty wild out there. Yeah. But what's interesting is that there's so many different, little cities that all have their own microcosm of real estate issues. Like, for instance, and issues is probably not the right word, but for instance, in Campbell technically almost has, I don't want to say a surplus, but a surprising amount of inventory compared to what we're seeing in like Santa Clara or in San Jose. Campbell, in fact, in August, for like the first time in a year, actually had more inventory this year than it did 12 months ago. But that's an entirely different price point. So what we're really seeing is like the higher end stuff we're getting a lot more of, but a lot of it's probably related to the fact that the buyer pool for that's significantly less. It's more the middle ground stuff where, I mean, you just kind of got to take what you can get.
Right.
And that's it.
So speaking of that, so now that you mentioned Campbell and some of these other areas in Santa Clara County, you've been doing this long enough now, Billy, to know that these things sort of happen in like spurts of time, right? So like right now it's Campbell, but now a few months later, it might be another city, right? And so when you talk about different areas that feed into, or areas that submarkets that feed into different submarkets, right? So if we're looking like into the future here, we're thinking, okay, well, in Campbell right now, there's some excess inventory. Well, what does that mean? It means buyers that are losing out in other areas, other submarkets, are eventually going to flock over to Campbell and eat up all that inventory.
Yeah.
Right? Okay, cool. So what are those other areas that we see feed into Campbell, those submarkets, and vice versa? Like, once all that inventory gets eaten up, then Campbell's going to be the hotter market, right? So it's this ebb and flow. We always see this, right? This happens every year. We see different markets pop up where there's excess of inventory or undersupply, and then one market feeds into the other, and then they go back and forth. So what markets right now are feeding into Campbell and are going to play into that sort of like symbiotic kind of relationship?
Yeah, and that's a great question. I would say that a lot of it's going to be related to just overall geography. So we're really seeing a lot of back and forth between, like Santa Clara, Sunnyvale, Mountain View, a little bit like in Cupertino, but I mean, usually with that, it's a little bit more closer to like Los Gatos and that sort of thing. But yeah, I would say anyone that I know that I'm working with right now that's looking in Campbell also has their antennas up for Mountain View and Sunnyvale, and a little bit of Santa Clara, but that one's a little bit more hit or miss, just simply because while it's still very popular, it's kind of hard to get away from something that also doesn't have a lot of like college kids in the area, and not everyone's attracted to those neighborhoods.
Gotcha. That's surprising. I thought you would have said like Willow Glen or like Cambrian area. I would have thought that those markets feed into Campbell a little bit more than like Cupertino and Sunnyvale.
Oh yeah, absolutely. I thought we were just discussing like different cities, not like also just adjacent neighborhoods and that sort of thing. So I was going a little bit more broad.
Oh, okay. Oh, I see what you're saying. Yeah, you're right. Like Willow Glen, Cambrian, those are like neighborhoods, not necessarily cities. So yeah, it makes sense. Well, yeah, and typically speaking, like when I've looked at how different markets feed into each other, I've seen a lot of buyers that buy in Campbell buy in Willow Glen and Cambrian as well, and vice versa. A lot of the buyers that buy there are also looking in Campbell. So I've seen a lot of kind of like, what's the word I'm looking for? Migration, those migration patterns tend to happen a lot between those three areas, with Willow Glen, I think, being kind of like the top tier one. And then depending on which part of Cambrian and Campbell are kind of like tied there. They're based on the different like neighborhood, what schools they go to and everything. But that's interesting, Billy.
Yeah.
That's an interesting take. Let's talk about San Francisco real quick. I know that you've got a buyer right now that you're working with up in San Francisco. You've got an interesting story actually on that one. So what's the deal with you're going to make an offer, but the seller, what was the story there?
Yeah, so we were going to make an offer for a property in San Francisco. The seller was simultaneously putting it up for lease. And essentially they were just kind of like racing the two markets to see which one would end up biting before the other one did.
Yeah.
And a lot of it was just of the fact that, we're really still seeing a lot of people shy away from SF, which is really unfortunate because, I mean, that used to be the destination city in the Bay Area.
Right.
But we're basically racing against the clock. The seller had to get a certain price in mind. They made the decision to sell after only owning the home for a couple of years. And so they really needed to get a certain price in mind or else they just weren't willing to take the loss. And we were unfortunately a day late, dollar short. And by the time we kind of figured out, okay, like what we're going to do. And again, we had to get creative about it. And so what we determined was, all right, seller needs to make a certain amount. They've got to pay off their loan. Let's approach this from a subject to type of sale and see if we can't just take over their existing payments to get them out from under that and onto their next step. But unfortunately, by the time we determined that would probably be the most effective way of making everyone happy, they had already signed a lease and we were unable to execute on it. But just the fact that we were able to come up with a strategy that was in the best interest of everyone was, I mean, that's always nice to know that at least like we were able to figure it out.
Yeah.
It was just unfortunate and execute.
So the seller's predicament then, because I remember you telling me about it, was they basically owed, was it that they owed more on the property than they were going to sell it for? Or was it that they weren't going to be able to recoup their full down payment? What was the initial purchase price? Do you remember on that one? And then, or what did they buy it for? And then what were they selling it for?
Yeah. So they bought it for $671 in like the end of 2021. And the number which they needed to sell it at in order to at least break even was $685.
Mm-hmm. Gotcha. Yeah. And they couldn't get the price that they wanted.
No,
yeah.
They got multiple offers that were below that, turned them all down, obviously. And so that's why we ended up, considering the subject too, because this way we technically would have a little bit more wiggle room as far as the purchase price goes, because we would be the ones just assuming the payments themselves.
Gotcha. Yeah, makes sense. So basically what I'm hearing is that these sellers paid $671. In order to cover all their selling costs and everything and whatnot, they'd have to sell it for a minimum of $685. They weren't able to do that, and so they decided to rent it out. This is a story that's going to be a fairly common story, I feel like, over the next few years. Look at the numbers in San Francisco in this last month: 967 homes for sale and only 313 homes pending. So we've got a very low absorption rate there. Well, comparatively, right, to pre-COVID numbers, much lower absorption rate, and I think it's reflected in that story. There's a lot of sellers right now that their home is depreciating, and it has been for some time now. They bought it in end of 21, you said? December of 2021?
Yeah.
That's crazy.
Not December, but like last quarter. But yeah.
That's interesting. So you're working with some clients on the Peninsula in San Mateo. There were 512 homes on the market and 386 homes pending. 366 homes pending. So question for you there. What are you seeing in the Peninsula? And what are buyers and sellers experiencing on the Peninsula right now?
Yeah, so I mean, it's definitely a very different story on the Peninsula than what we're seeing in SF. There's definitely a lot of demand to be close enough that the, 2 to 3 day a week, a hybrid work schedule isn't overly disruptive into their lives. So we're definitely seeing a pretty good resurgence on the peninsula itself.
Yeah.
Even for instance, in Burlingame, I'm in talks with someone right now who is expected to inherit a property there, and it's pretty amazing what people are still able to net per square foot, even for something that is over 100 plus years old. And I think a lot of it is because people still want to be in that area. I mean, you've got excellent weather. It never gets overly hot. I mean, a hot day on the peninsula is what, like 75 degrees?
Right.
So there's still a lot of appeal, but not necessarily within like the city itself.
Yeah.
So there's a lot more attention being paid to what's nearby, what's accessible, via Caltrain, that kind of thing. And just overall, what's out there as far as not just like the quality of the homes, but the neighborhoods, the public transportation, all of that really lends itself to a much more positive experience. So you're kind of getting like the old school SF experience without having to be in the city.
Interesting. So you're still seeing, because what the data says is like, hey, the demand is there, but it's not there like it used to be, because when you look back at pre-COVID numbers, the peninsula was hot. There was a lot of demand, and now it seems like the hottest market is really Santa Clara County. So it's really the heart of Silicon Valley is now on fire, and the peninsula seems to be more and more of an afterthought. It's almost like, we're going to go there if we can't get a property in Santa Clara County, which it used to be the opposite. It used to be like, everyone needs to live in San Mateo, and then the ones that could not afford the San Mateo County prices, came on down the peninsula and eventually, settled, quote unquote, settled for something in the South Bay. So why do you think that is?
Well, I do have my theories on that. I think a big part of it just kind of is determined by whether or not you think that the current work trends are going to continue on as a norm. We are seeing a pretty big push to return to office.
Right.
So you have some people, sort of hedging their bets by primarily focusing on the peninsula, where if they do have to go back to the office 5 days a week, at least the overall commute's not that bad. But you have a lot of people who, their risk tolerance is a little bit higher, and they're like, what? I think that the, 2-3 days a week in office thing is going to be the norm.
Uh-huh.
And as far as who is betting correctly, I mean, there's only one way to find out.
So, yeah, no, I hear what you're saying. And that's kind of my thought too, is that the reason San Mateo County was so hot for so many years was because you're closer to the, quote unquote, action. You're closer to work, and it's easy, it's the commute time is far less. And so basically by buying in Santa Clara County, you are putting yourself in a position where the commute's going to be a lot worse. And so what I'm hearing you say is that a lot of people, or a lot of potential buyers are no longer needed in office 5 days a week. And for that reason, they're willing to kind of sacrifice that additional commute time because they're not having to go into the office as much. What happens if and when a lot of these employers call their employees back to the office close to full time? What happens to San Mateo market the San Mateo County market in that case? I
think that the people that hedged their bets and decided to buy now are going to really be grateful for that kind of thing. So I know a lot of people would be really disappointed if that were the case. I mean, I've had some people on a hybrid work model buy as far out as, Stockton.
Oh.
And their office is technically in, Mountain View, for instance.
Interesting.
In those scenarios, it's pretty wild, And granted, every tech company is going to have, their different models of how they implement this kind of thing.
Yeah.
My client bought out in Stockton, for instance, because Google's still offering, a lot of shuttle services and stuff, and checking in when you're on the shuttle still counts as being in the office, even if you're not technically. So a lot of it also is going to depend on like the overall just like culture for the company they work at. But I would definitely be surprised if we didn't see more situations similar to what my buyer in San Francisco had to deal with, which is a seller that, you know, really has a very specific criteria in order to make the move, and potentially has to consider, you know, a lease where they're bleeding a few $100s every month, in order to, you know, kind of free up enough capital they can at least get closer, so that commute isn't as detrimental on their lives.
Yeah, I don't know, but I do feel like, from an investment standpoint, buying a property in the Peninsula right now when the market is quote unquote soft. It's not soft, by the way. Okay, like, let's just like be perfectly clear. It's not soft, but relatively speaking, it is. You know, and if I were a betting man, I would say that, just based on the companies that have already called back their employees, I don't think that that's going to stop. I think that once those numbers become public and people actually see what productivity looks like from a P&L perspective, you know, I think more people are going to call their employees back to work. I really do. I don't think that it's going to be a forever thing, this work from home. I could be totally wrong. And I know that there are a lot of people listening to this podcast right now that are going to shut this thing off right now and be like, you're wrong. Maybe not. I could be totally wrong, but I do see the Peninsula having a resurgence. Maybe not all the companies, but I think enough of them will, to where you'll start to see a larger push, or a bigger push, to getting housing back closer to the action once it becomes more and more of a thing. The only proof you need, by the way, that this is going to become a real issue real fast is going back onto the highways now. That's all the proof you need. Because a year ago, 6 months ago, the traffic wasn't as bad as it is now. So the traffic is starting to get bad again. If you're just like going up and down the 101 or 280, you can see it. At peak traffic hours, it's getting real again. It's real talk. Hey.
Yeah, no, you're absolutely right. And it will be interesting to see just how much that continues to snowball. You know, I mean, I wouldn't be surprised if, you know, in the next year or two, it's back to where it was.
Yeah.
But we'll see. You know, I do know that if that is the case, it will be beneficial for, you know, the parts of the Peninsula that we started to see, you know, a lot of improvement. Like, for instance, you know, Menlo Park, around like, you know, where Facebook is located. You know, that area was still, you know, like a year ago, was still relatively inexpensive to purchase compared to, you know, Menlo Park proper. And we started to see a lot of work going into that neighborhood, a lot of, you know, homes being refreshed and renovated, you know, so that can definitely be beneficial for the people that already own property there. You know, as home values rise, obviously, like they have more equity, they're able to, you know, do more. And so I think that people that bought in those areas are probably hoping for a little bit more of a return to office push, just so that way, you know, the investments that they made continue to pay off even more. You know, I think that eventually East Palo Alto won't be something that people try to avoid.
Well, we started to see that pre-COVID, by the way. You know, the East Palo Alto, East Menlo Park thing, that was like not a if, but when kind of thing. All that gentrification was gonna like fully manifest. COVID kind of put a damper on that. It slowed it down, but I don't think it stopped it. You know, so I do think that is going to continue to happen. And you're right. Who knows when, but it will happen. Billy, we're coming up on time here. So, but I'm going to start a tradition here. Three bold predictions. Three real bold predictions for the market next month, next quarter, and over the next 12 months. So one bold prediction for the next month, next quarter, and then next 12 months.
Oh, man. All right. Well, I'm either going to look like a genius or a complete madman.
But
I guess we'll find out.
But you know what? Let let the haters talk. They just hide behind their keyboards. Every single time I get one of these keyboard warriors that says, hey, like you're wrong or whatever, I said, all right, I challenge you to a healthy debate here live. Not one single person has ever taken me up on it, because the truth is, man, these are predictions, but they're not guarantees, right? We don't have a crystal ball, but guess what? You know the market better than most people because you're living it, you're seeing it every single day, Billy. So your opinion, your opinions do matter, so I want to hear them, baby.
All right. Well, all right. So prediction for the next month. I'm predicting for the next month that we are going to see the beginning of the winter market be a lot heavier than what has been traditional. I think that with the recent Fed announcement, the markets kind of took a little bit of a hit initially, but I think we're going to see a very busy winter market. Do I think that inventory is going to skyrocket? No. But do I think that this trend of, continued appreciation on a double-digit level, I'm pretty confident that's going to continue on. I mean, there's just not enough inventory to go around, and people are willing to really just pull out all the stops in order to get a home. Now, you said 6 months.
Hold on a second, just to make sure. You said double-digit level? Double-digit appreciation in October?
That's what I'm thinking.
Hold on.
Well, maybe not double-digit. Let's tamper that, because that's a little too... Okay, I'm thinking between 6 to 8%. I'm thinking when we get the month's data in, I'm thinking in Santa Clara County, we'll see average homes selling for at least 6 to 8% over what they were selling for the previous month.
Really? That's aggressive. But and is that across all counties, specific to Santa Clara County? I'm curious.
Santa Clara County.
Santa Clara County. What about the East Bay?
East Bay, I think that we're going to... Fremont's obviously going to continue to add a lot of value overall. But I think that we also have to consider, what's going on in Oakland. I think East Bay is going to continue to see a lot of popularity as far as like the more southern end of it. But I think that, just kind of what's going on as far as, what's happening in Hayward and Newark, Union City, I'm not seeing a lot of interest in those cities specifically. So I think that we're going to see some continued appreciation in the East Bay, but I don't think it's going to be quite as widespread. I don't think that it'll be as easy to make an overall blanket determination as it is in Santa Clara County.
Interesting. Okay. Gotcha. So Santa Clara County then 6% appreciation month over month. That's a lot, but I can see how you think it would happen because purchase power hasn't necessarily gone down since the Fed announcement, right? And we're still seeing Santa Clara County bounce back from, mid of last year. So there's still room to go up, right? We haven't surpassed the prices of where they were in March of 2022. So there still is room to grow. Interesting. All right, next quarter. So in Q4 2023, bold prediction.
Bold prediction for the first quarter. I think that Q1 is going to be a tough one. We're going to absolutely see another rate hike happen before the end of the year, and that's probably going to put a damper on things. Do I think that we're going to see a massive drop in prices? No, I do not, but I think that it's definitely going to have a negative impact on overall inventory. So I don't think that we're going to see a lot of homes come on the market in Q1.
Interesting.
Probably substantially less than what we've seen, compared to Q1 of this year. So it's gonna be tough for home buyers. I mean, obviously, sellers that are willing to take the leap are going to be benefiting. But for anyone that's waiting, thinking that there's going to be more options later down the line, I think that if they continue to wait, it's just going to lead to more disappointment.
Got it. So you think the rate hikes? So for the next quarter, so in Q4 of 2023, you believe that there's going to be another rate hike?
I don't know if there's going to be another rate hike, but I know there's going to be one this year. And when they implement it, it's probably going to be something that's going to get held for a while. And so I would be really surprised if we saw a lot of inventory go on the market. I think we're going to continue to see this suppressed inventory continue on through the beginning of next year. So that's my probably not so bold, but realistic prediction for for Q1.
Gotcha. Okay, cool. Next 12 months, one bold prediction for the next 12 months.
I think that over the next 12 months, San Jose is going to really cement itself as a destination city. We saw that the local government and Google just recommitted to their Dearden Station project. And it's going to be interesting to see how that continues to transform, especially like the downtown area, because San Jose, it's popular, but as far as like the popular areas in San Jose, I mean, we're pretty much limited to Willow Glen, Cambrian, Camden, Evergreen, a little bit of South San Jose, but as far as like the downtown area, I mean, that's kind of stagnant. It's really kind of given the double whammy of, the school districts in San Jose are so oddly shaped that finding something that is very well regarded is already tough to find in that area. You couple that with, just the current state of downtown. And so we're seeing a lot of people kind of sleep on that, but as this continues to manifest itself into something more tangible, I think that that's really going to draw in a lot more attention and a lot more interest. We started to kind of see that happen, at the end of last year, beginning of this year, when, they hadn't announced a slowdown yet. And then when that slowdown did happen, we saw investor interest almost completely drop off. But now that they've renewed that commitment, I think it's going to get pretty busy.
Yeah, I thought it was funny when they never said the project was off, like no one from it was like the project's off. There's been, by the way, like way too much money invested for them to just say like, we're gonna scrap this project. So I never thought for a second that project was gonna get scrapped. I know that a lot of people were like scratching their heads and saying like, oh, I wonder if they're gonna, and there was no way, at least in my mind, that project was gonna get scrapped. And having been able to sit on a couple developer meetings, San Jose development meetings since since the summer. So I've sat on a couple of panels, local developers here. That project is back, like that project is like full steam ahead again. So it'll be interesting to see what the impact is. So you think San Jose is going to benefit greatly in terms of housing appreciation over the next 12 months?
Oh yeah, absolutely. Especially in the downtown area. And I would say probably anything within like a 2 to 3 mile radius.
Interesting.
I mean, if you're thinking about getting on the ground floor, now's probably the time to do it.
Very good, man. That's awesome. Well, Billy, always a wealth of knowledge. Thanks again for dropping by, man. And thanks for keeping it real.
Anytime.
All right.